Very good morning to everyone. This class is all about net asset value calculation of mutual fund and what do you mean by net asset value, what will be the total value of its assets and how to calculate under NAV calculation formula. So first we should know that how mutual funds have been calculated. So mutual fund are priced values are used based on the measure. So mutual funds are priced and valued using a measure called net asset value, right? You buy one share and how it is calculated in the market. So you'll come to know about a clear idea about how formula being used on the in case of asset valuation calculation. So your mutual funds are priced and valued using measure in terms of net asset value. Here's some of the detailed explanation how it works in the company. So the first we'll learn about net in case of net asset value, the definition of net asset value. So here you have it represents a per share value of mutual funds assets. Then you deduct that asset from its liability. Then it get a price at which investor buy, which is called offer price, or sell and a redemption price, which has to be redeemed on certain date or certain day with certain redeemable price, and that becomes a mutual fund unit. So example is given about formula NAV is equal to total assets minus total liability. So in this way you can identify net asset value by using of mutual fund in form of total value of its assets and minus with the liability, and later you need to divide it this amount with the number of outstanding shares. So step by step calculation you need to work out. So net asset value represents per share value of the mutual fund. So you're going to calculate how much is per share value of a mutual fund. So the formula is given here: total asset minus total liability. Now when it's coming to the components of NAV calculation, so we can go to for the next slide what I show here with the net asset value and the mutual fund price, which is fixed, and based on that how it has been calculated by using this formula. So next, some of the component you might be seeing here: total asset. I said NAV is equal to total asset minus total liability. Then you divide, then you go for dividing into number of outstanding shares. Now example again, based on the component, total asset include like market value. Example, security like stocks value, bond value, cash or cash equivalent, accrued income, which is interest or dividend, etc. All this item, when you club it or you add it, you get the component of total asset value. So total asset is equal to stock adding bonds or cash equivalent or any type of interest, dividend, or any type of assets which has to be considered under asset by the company. Then you have a liability too, but the component you can see here, asset into current market value of all security held by fund plus cash, accrued income, I said. Then the total liability include expenses like management fees, then tax payable, operating costs or short-term debt, or any other liability like borrowing, etc. All this will be calculated in terms of liability only, the company's liability and company's asset. And third component talks about the outstanding shares, the total number of shares of units held by the investor. So here total number of shares issued by the mutual fund. So you add all the asset, you minus all the liability, which has to be divided by outstanding shares. So number of shares or units held by investor. So you get a calculation of asset minus liability and divided by outstanding shares, and you get NAV value. And take example, when it's come for NAV value, I can give example. Suppose securities of a company and a mutual fund, by calculating of NAV will be security as in dollar 100 or $100 million, $100 million as an asset which is in form of security. Then if you go for adding cash equivalent $20 million, okay, dollar in form of 20 million, then you have some of the accrued income in form of 5 million. When we add security cash equivalent accrued income, 100 plus 20 plus 5, it is altogether asset become $125 million. So when you add, because the formula has given asset minus liability divided by total outstanding shares. So when you add, if suppose I give an example about the company is having security of $100 million, cash equivalent $20 million, accrued income $5 million, 100 plus 20 plus 5, it will be 125. Total asset is equal to 125. When it's come for component of liability, take example, accrued expenses might be $5 million, tax payable $2 million. So the liability will be, total liability will be $7 million. Now asset is about $125 million, total liability of $7 million. And the third component is an outstanding shares. This is the example what I'm going to explain about how NAV is calculated in the mutual fund. So total number of outstanding shares is $100 million. Sorry, not 100. I can give instead of 100, $10 million. $10 million. So you have a three component here. One I said about $125 million of total asset, and liability of $7 million, and you have outstanding shares of $10 million. Now real calculation of NAV will be like NAV is equal to 125 minus 7 divided by 10. So when you do that, you get an answer of 11.80 per share, dollar 11, okay, $11.80 per share. So this is the way of calculation. So asset minus liability divided by outstanding shares, you get the NAV calculation. So NAV of mutual fund is a dollar 11.80 per share. This means that if an investor were to buy or sell one share of the mutual fund, they would do so at a price of dollar 11.80. So this is way of calculating. Then we need to identify how it can be considered, and how it can be addressed when it's come for calculation of NAV. So I repeat again, I have given one example about component of NAV, asset minus liability, and divided by outstanding shares, and given, suppose take example 120 is a total asset, and 7 is the total liability in form of $1 million, or in form of any thousands of rupees, or in form of outstanding shares I said 10. When you divide it, you get 11.80 or 11 rupee 80 paisa per share value under mutual fund. So this is how NAV is calculated. Uh, the same thing, the first format as in component, second asset, mutual funds required to calculate and publish their net asset value at the end of each trading day. Every trading day they need to identify, and the process already said the valuation of asset, the market price of each security in the portfolio is determined, then the deduction of liabilities, expenses or obligations are subtracted from the total value of asset, then you divide or division by shares, the resulting of net value divided by total number of outstanding shares. So net value, when you add asset minus liability, you get a net value, and which is to be divided from the outstanding shares, which will determine NAV. So you can multiply in this way, and every mutual fund companies, they just go for calculating net asset value of mutual fund based on this calculation. Overall assets, so asset might be many things, might be asset security, or security in form of stocks or bonds, or cash or equivalent assets, and the liability of any type of expense like house, any fees or many other. So that when you add and minus, you will come to know about net value of the asset, and later you just divide with the determining of outstanding shades, which will give a clear value of a net asset value. Then third one, pricing of mutual fund units. How pricing of mutual fund units. So you should carefully calculate what will be the opening price, what will be the closing price. So based on the calculation, this valuation of the price will be taken into consideration. So the pricing of mutual fund units based on the net asset value of the fund. Okay, always it is calculated net asset value of the fund. And pricing of mutual fund units, like you have a forward pricing, cutoff pricing, NAV applicability. So based on this calculation, the pricing of mutual fund goes. So if I talk here, you are seeing here buy price, which is called subscription price, the price at which the investor purchase of mutual fund units, typically equal to NAV plus any applicable sales loads or fees. So buying price is in a subscribing price, which include all the calculation of NAV plus or applicable of sales load or fee structure. Then a selling price or sell price, redemption price at which investors sell the mutual fund units, generally equal to NAV minus applicable exit load. See, when it comes for applicable exit load, you have a sales load when you buy. A sales load will be added on your net asset value when you buy it, and any exit load, if it is there or including fees, that will be minus when you sell it. So pricing of mutual fund, buying price based on the subscription price, what Mike said, which has a NAV again asset minus liability divided by outstanding, and plus with the sales load. After adding that, you can buy, or selling price after minusing of any type of exit load, if any. Now here, this is the way of calculating our pricing of mutual fund units. And this pricing of mutual fund units, I can consider as in forward pricing. Mutual funds are used forward pricing also, like, which means NAV is calculated of end of each business day, and all purchase and sales are processed on the next business day of NAV. And there is one called cut-off price or cut-off time. The cut-off time for accepting subscription and redemption request usually 3 p.m. 3 p.m. on business day. So you know, right, cut-off timing will be there before 3 p.m. They just identify the final price fixation, because market closing timing also remains same. So requests received after the cut-off time are proceed our next business day. Any request of cut-off price will be after 3 m will be received for the next day. Then NAV applicability, I can tell under buy price and sell price. Purchase and sale is the one of the calculated end of business day in which request is received. So there are certain pricing mechanism too when it's come for pricing of mutual fund. So we call NAV based pricing, NAV load based pricing. So NAV based pricing will be, most mutual fund use NAV based pricing, where price of each unit is equal to NAV. Load based pricing will be, some of the mutual funds use load based pricing, where a load is added on to the NAV to arrive the purchase price. So that's why I said load itself is a buy price and the exit load will be the selling price here. So there are factors affecting this pricing policy 100%. The market volatility, the changes in the pricing level will have an impact or affect the pricing policy. Changes in the prices can affect the NAV or price of mutual fund, consequently has an effect from the factor of market. Sometimes change in the interest rates can also have a effect on the NAV, or price of a debt mutual fund also might go up, or changes in the dividend and the bonus declaration also has an effect on the pricing policy of mutual fund units. So this is how you should know how mutual fund pricing has been set by using that formula. Then you have a NAV and daily valuation. NAV and daily valuation. So NAV is updated daily after the market close to reflected, and I said the market closing time will be 3 p.m. Any request comes after 3 p.m. that will be considered for next business day. Now this is how it has been shown. So daily NAV disclosure, and the transparent pricing. If I talks about daily, here you can see here NAV and daily valuation. NAV is updated daily after the market close to reflect changes in the value of the fund underlying securities, dividends or interest income earned, any change in fund expenses. For fund investing in international security, time zone difference may result in violation of adjustments. So daily NAV mutual fund are required to disclose NAV on daily basis, that is called daily NAV disclosure, and there is a pricing transparency where mutual funds are required to provide transparent pricing including applicable NAV and any load or charges. So everything has to be calculated systematically, and you have when it's come for NAV and daily valuation, there are certain regulatory framework like a SEBI, Security Exchange Board of India, regulate the pricing of mutual fund units in India. Then you have industry standards where mutual fund associations and industry bodies also provide guidelines and standard for pricing mutual fund units. So SEBI as well as Industrial Standard Board will fix about what pricing structure can be enhanced. So NAV with the daily valuation has to be considered in form of declaring or showing the valuation of the price of particular mutual fund. And the fifth one, the factor affecting NAV. Uh, I have said already about some of the factors affect the NAV, net asset value, disclosing with the loaded and exit load fee structure when you buy with the sales load and when you sell sell with the exit load is added on. Then the factors affecting like market movement, increase or decrease in the price of security held by fund impact its total asset value and consequently NAV. So market movement always increase decrease prices has an impact or effect on the NAV. Then income distribution, when the fund is distributed in form of dividend or capital gain to the investor, the NAV decreases of the amount of distribution. So everyone should know that when funds are distributed with dividend capital gain, NAV, net asset value, decreases automatically amount of the distribution. And there are new investment or redemption where large inflow of investor money can be slightly affect the NAV depending on the transaction cost. So there are multiple calculation um, when it's come for different calculation in different mean or mode. So it is calculated in form of a different way. So in form of a calculation, we need to consider how it can be impact on the market valuation. So the factor affecting NAV should be known under market changes, market fluctuation, market movement, income distribution way, or any other way of redemptions. Then you have a difference between NAV versus market price. Unlike stock or in form of a ETF, funds shares are not traded throughout the day on exchanges. So investor transact the NAV price calculated at the end of a trading day. So this ensures all the transactions occur at the fair price reflecting the fund updated value. So NAV versus market price also classify in from a different way where it will say that how mutual fund shares are not traded throughout the day on exchanges. Then all you people can go through for net asset valuation calculation in this YouTube channel where it has been explained very clearly how mutual funds is valued in the market, what is important, what is not important, how it is calculated, and we need to see that how it is classified and how it is declassified when it's come for asset minus liability and division between the outstanding shares and what you get within net asset value. And we are gone through for how loading of price on the unit or exit loading fees on particular unit has an impact on buying of this mutual fund or selling of mutual fund. And the what is the time horizon, I said about 3 p.m. after any request will be considered for the next business day. So thank you for listening. We'll see in next class.